Hi guys, Light Forex Broker, Market Analytics, we're back. I'm Roy Kuzin. Today I want to follow up on the oil. It's been quite some time since last time we left the technical situation on the oil. Actually, it's been about a month and a half. Last session on the oil was taken on the 5th of December, still 2018, and the title was Crude Oil, Preparing for a Bullish Flipover, right? That was the title. So I was basically describing, the probability of bottoming out. We had a huge downside trend on the oil, a huge downside drop, and I was beginning to prepare for establishing a bullish position. That was back at the beginning of December. Let's go ahead and take a look at the oil and reanalyze the situation and see where we're standing. Let's go ahead and take a look. Alright guys, I'm going to refresh your memory, right? Basically, I'm just going to follow up, naturally going to follow up on our last session on the crude oil. Like I said, back at the beginning of December. So price was after a huge downside drop. When I say huge, it was very consistent, very intense, almost no corrections, right? Price came from 76.5 and at some point it made it to the 50.3. Remember that level 50.3? I actually predicted that this level may break the downside move. That was my prediction. I thought that this may actually be the last support level that is going to break the downside move and possibly reverse the whole trend. So and right back at the beginning of December, price was engaging with this key level 50.3. At first it kind of broke it a little bit, right? But it came right back up, and I'm talking about, of course, the 50.3, and then it began to trade sideways. Now take a look at the same day that I was doing that last session on the crude oil was actually right here, 5th of December. So I was preparing to pull the trigger, right, on a bullish position, but before I did that, and that's something that I always do, I always make sure to do, I analyze the big picture, right? I get a sense of where things are most probably going to go, but then I require a second level, kind of a triggering system, right? Because I want to fine tune the actual entry. Usually when we analyze the big picture, things are too crude to actually time the moment of entry. It's good for the big picture, but when you want to fine-tune the actual entry, you would need to switch to a lower time frame and look for a solid, strong, technical, it could be a trading technique, it could be, a pattern or whatever strategy you're using, but you need to find a second level, condition to actually entering the trade, which I call the triggering system. Now, if I don't have that, usually I would probably look for opportunities somewhere else. And in the case of the crude oil, I had that. Because as price was engaging with that 50.3, the downside momentum was broken, and price began to trade sideways for the first time within a few months, right? It was straight downwards all the way through, and then it started to trade sideways. But when it started to trade on that, it began to form this really tight trading range. Take a look. I was able to pinpoint that movement really nicely with my symmetric setup here, and I was going to use that system, that setup here with the top key level, 53.34, take a look right here, as my official trigger to enter you know, a bullish position. So I was getting ready. I was literally with my finger on the trigger, waiting for price to break above 53.34, right? And I only required at that point, my only requirement was a daily close, just to begin, just to open a, you know, to start small. Later on, once we get that weekly confirmation, my plan was to increase the position. And according to the bigger picture, I'm not sure if you remember, we were talking about a possible end of a downside correction and the beginning of a full-fledged upside trend, right? That was pretty much, you know, the proposition. And I'm going to go back to that, and we're going to look at the bigger picture again. But I just want to refresh your memory with what happened back at the beginning of December and what happened later on, and exactly what I decided to do eventually. So price failed to break above 53.34 on four, okay, you know, take a look, on 4 consecutive days, right? 4 consecutive occasions, if you will. And it began to drop. It didn't take too much, it didn't take too long for price to completely capitulate and break the whole setup, break it on the downside, actually break below 47.54. At that point, obviously I stayed on the sideline, right? My trigger system was not triggered, basically. So I stayed on the sideline, and I decided to keep watching the crude oil very closely, because I felt that we're probably going to engage with the last thrust, with the last downside thrust. You know, usually when you have a strong move, price tends to overshoot itself. So I kind of sensed that this may be the last stretch on the downside, and I quickly went back to the bigger picture, and here's what I found. Take a look. It's quite interesting. So I'm taking you to the bigger picture, right? And I would just like to remind you, the assessment, right? The initial assessment, right from the get-go actually, is that we may be looking at a classic Elliott wave cycle on the grand scale, right? We're talking about the beginning of 2016, actually the end of 2015, right? 4 years back 4 years ago, price began to move to, you know, it began to shift the major trend from downside to upside. And when it did that, it went on the first wave, impulse wave, followed by a second corrective wave, then of course the third impulse wave, followed by that huge drop, which I just touched base on. That was, of course, we think that was, potentially speaking, the fourth corrective wave, right, in this Elliott wave cycle. And that means only one thing. If that's the case, of course, then we may be, we probably looking at, right, the very end of that fourth corrective wave and the very beginning of the next fifth wave. And you know what the implications are if that's the case, right? Price will take the previous major high. That's one of the most certain things that we can count on if indeed we're going to embark on the last, you know, impulse fifth wave in this Elliott wave cycle. Now, so this is the case from the bigger picture. Now, obviously, this is really, really amazing stuff, because once price broke below 50.3, right, and I realized that it's not going to bottom out at that point, what I did was I just reanalyzed the bigger picture, and I found out something quite interesting. Take a look at this. Talking about the black dotted line right here. Take a look. Let me close in even further than that. 44.85 roughly. This is the level I'm talking about. First, I want you to see the very lovely reaction we had here on that level. Take a look at this bar, right? And even the next one. So a lot of respect to that key level coming from the weekly perspective, right? Now I want you to, let me show you where I came up with this particular key level. So what I did when I noticed that price is going to go further downwards, I just took the whole move from the very beginning, right, to the very end. We're talking about the first, second, and third waves, right, from the very bottom to the very top. And I applied the 76.4. 76.4, that is the last Fibonacci correction level by definition, and it is the most important one. Usually it is the last line of resort. So by definition, if price doesn't break the 76.4, it is still in a technical correction range. Basically, we're still in the correction phase and nothing else. So the fact that price went straight to that 76.4 and had this really nice U-turn here, right on that key level. So I think it's really important that price had made it all the way to the 76.4 and begin to turn around right on that spot, right? I think that's huge indication that we are indeed looking at the very bottom of that fourth wave. Now what I did when price began to turn around, I just started to build into a bullish position. I started small. Later on, I kept increasing the position as price kept moving forward, right? Now, I also reanalyzed the potential price targets for that upside move that we're talking about. Now, obviously, I could set my price target, right, my final destination, right around the peak, the tip of the third wave, which I do expect price to get there eventually. However, I have to say that there is one more level which is safer than the previous major high, and that level is the 76.4, but on the it's actually the counter 76.4. In this case, it would have to be the 76.4 of the fourth wave from the top to the bottom. Right? If you measure 76.4, that's exactly right here at 68.60, which is why you can see that I already have a take profit order placed right there on that spot, right? And I have a secondary target, which I consider to be also an important price target. This one actually is a 1.618 projection key level of the last opposite move. I'm not sure if you remember this, but back in the day when price began to drop here significantly, I was actually right on top of that turnaround. I was actually getting involved with a pretty decent sized bearish short position on the oil, and I was very fortunate to grab about $16 or $17 from pretty much 74.5 and all the way to 50, 57 or 57 something, around the 60 level I got out. But what was interesting to me at that point was to analyze the last opposite move, which was this one, from the bottom to the top. And the 1.618 is right here, guys, 57.50. I think we can use this level. I think it could be a significant resistance once we get there. Right, so I'm going to use this level for partial execution. But right now, I'm still building up my position as price continues to move forward. Now here's another encouraging sign. The very level that I was holding as a trigger, right, back at December, 53.34, was broken. Finally, was broken last week. Take a look. really decisive close here. The close was 53.69. That's above 53.34, as you can see. And you can actually see that price right now rests right on that key level, right? Now, it was a resistance up until last Friday, and now it should be a support. So it should support price and keep propelling, price towards our first price target at 57.50. Should be interesting to follow up on this one, no doubt. Right now, my stop loss level is still pretty far, right? Because I want to make sure that we break above that 53.34. We're still kind of hovering around that key level right now. Actually, you can see that there's a little bit of a downside move, kind of retesting that 53.34 from above. But I'm pretty sure we're going to be able to continue moving forward. So I'm going to adjust the stop loss level accordingly. Alright guys, that's about that for today, and that's about that for the crude oil. Looking pretty bullish. I promise to follow up and keep you posted. In the meantime, I wish you a great trading day, and I'll see you in the next session. Bye bye.